Good morning, everybody. Good evening, good night, wherever you may be around the world. I am Master Trader Gareth Soloway. Wonderful to be here with you guys today as we get into this game plan. Now, I'm pumped because today is a massively important day. All right, we have the Federal Reserve announcement at 2 p.m. Eastern Time, followed by the key, and this is the big one, the key press conference. Now, you might say, well, why is the press conference more important than the rate hike or lack thereof? The answer is because that is the guidance that the markets will cue off of. Right now, the markets are pricing in about an 85% chance of a 25 basis point rate hike. I think that's exactly what they're going to do. I'm going to explain real quickly, give you guys the rundown of why you're likely going to see 25 basis points. Okay, go back, rewind. 2 weeks ago, in fact, 2 weeks ago today, Jerome Powell was in front of Congress. We had just gotten out data that was inflationary, and he basically said to Congress, listen, we may have to go 50 basis points. After that, we saw the banking markets collapse, right? We saw the banks like Credit Suisse, SVB, SBNY, all of these banks collapse. Stock prices of all these banks collapsing as well. I mean, take a look at FRC recently, down huge from the all-time or even 52-week highs. So the bottom line is that the Fed was put in a pickle here. They don't want to go to zero right now because there still is, number one, inflation. Number two, if they go to zero, right? If they go to zero interest rates, the markets are going to cue off of that things are a lot worse in the banking sector, that things are very, very chaotic, that there's a potential catastrophic black swan event coming. And so ultimately, what the Fed will do is probably thread the needle with a 25 basis point. This way, they don't really raise much, but they raise just enough to kind of keep confidence that they're in control and that we're not looking at a major banking collapse that's even greater than what we've done. All right, so that's what we're looking for today. Remember that announcement at 2 p.m. Eastern Time. Then at 2:30, we have the press conference. I expect him to guide in a dovish manner. He has to guide this economy through this banking process, this banking crisis. The markets and the economy, no doubt, slowing down due to this. He has to see that. And he also has to kind of leave the door open for future rate hikes if that does happen. But I'm looking for a 25 basis point hike and then a kind of pause. So we could be looking at not a pivot. A pivot technically would be dropping rates. But I think after the hike today, you're looking at a pause until more data comes out and more stability in the banking market. All right, on this, let's take a look. The S&P futures right now are trading fractionally lower, basically flat on the morning session. The NASDAQ 100's down a little bit. Bitcoin is trading up just a little bit on the day. I'm going to get into some charts we're going to start discussing here very, very quickly. The big one today, and this is going to be interesting, guys, watch the U.S. dollar. I'm going to show my chart now. We're going to start out with the U.S. dollar and take a look at what that shows. So what's interesting to me about the US dollar here is that you're coming into this Fed decision with technical support, right? So again, if we look at the dollar, it had this 3-bar surge, 1, 2, 3. Then bullish consolidation, sideways consolidation after a 3-bar surge is definitely bullish. We then saw upside in the US dollar. Since the highs here and the banking crisis began, we've seen the dollar start to decline. Interestingly enough, look at where we find ourselves back into going into this Fed decision. So interestingly enough, does this announcement, does the Fed calm fears about a banking crisis? If the Fed calms, and think about this, right? If the Fed calms the banking fears down, does the dollar bounce? Does the Fed look like they're in control? Does the Fed say that the bleeding has been stemmed or stopped in the banking sector? Does that yield a bounce in the market? If the dollar bounces, does the banking system bounce? Do the bank stocks bounce? But then does technology sell off? Because usually when the dollar bounces, tech sells off. Now, what's fascinating about the last 2 weeks is that tech stocks have been a beneficiary of money flow that's been going out of the bank stocks, right? We've also seen Bitcoin do well. We've seen gold just ripping higher until yesterday's rally in the banking stocks when it really came back in. So we're really looking at, for me at least, when I look at the dollar chart today, number one, it's at a pivotal level. All right, which means that the decision today is either going to bounce it, which is the more likely scenario. Remember, everything I do is all about probabilities. There's no, I feel, my gut tells me. That's BS. All right, anyone who's giving you advice based on what their gut tells you, you shouldn't take that advice. Probabilities are the name of the game here. And basically what you're seeing here is the dollar's into technical support. So the probabilities favor a bounce in the dollar. If not, and you break lower, guess where the dollar's going? The dollar is going to head back to the recent lows all the way down here. There's really not a lot of technical support once you break this level. So again, probabilities favor a bounce in the dollar, which tells you the Fed is going to try to reestablish the fact that things are not that bad, even though they're going to take kind of a slight hike and pause mentality. They're going to calm fears, and that should give the dollar a bounce. If that happens, we could see gold selling off a little bit. We'll watch to see what Bitcoin's going to do. Speaking of Bitcoin, we got to go look at this chart, guys, because Bitcoin is also at a major pivotal level. You guys see, and by the way, for those of you that have followed Fed decisions or any big decision, jobs numbers, anything like that, what you'll notice is charts tend to be at major pivotal levels going into these announcements. All right, so when I look at Bitcoin, Bitcoin has continued to chop sideways over the last couple days, ever since it tested the 28,500 resistance. And by the way, why is that resistance? All right, because it is the lowest point. Check this out, guys. 28,500, which is the high that we just hit over the last couple days. It is the low pivot of the mid-bull cycle of 2021. So again, this is the symmetry of the charts. This is the power of the charts. You know, so many people look at this chart, right? I mean, you look at this, what you're seeing on my screen right now, and you say, how do I make sense of this? This looks like a bunch of jumbled ups and downs and whips and lefts and rights. And ultimately, there is sense that can be made out of it. This is why chart reading works. All right. And again, as I always say, make sure to like my stream here. I want you guys to like the YouTube, follow it, make sure you get updated as I go start doing these more on a daily basis, more and more until it is fully daily. And then obviously, guys, check out verifiedinvestingcrypto.com, inthemoneystocks.com, and verifiedinvestingeducation.com. Education, by the way, the number one thing. Okay, back to Bitcoin. So what we know is we're at a pivotal level going into this Fed announcement. If we see a pop on Bitcoin, there's a major level right up here. This is the big one at 30,000, even numbers. If you're a technician and you know charting, you know that even numbers matter in charts because they matter to our human psyche. Naturally, up here, guys, up here in our brains, we are drawn to even numbers. All right, we don't talk about 23,752.5. We talk about 50,000. We talk about 100,000. We talk about 30,000. We talk about a million. These even numbers on a statistical basis hold weight. So if we see a rally above 28.5, your next resistance is going to be a pierce of 30,000. For me, I'm going to be looking to inch in some more on the short side of Bitcoin. I'm in the camp that I play probabilities. Doesn't mean Bitcoin can't break 30,000. Let's keep that in mind. It just means that probabilities are the way I position myself. So I started a little bit of a short position at 28,450, right around 28.5, and I'll add to it at 30 and change, a pierce of 30. Now, if we establish ourselves above 30,000 and we stay above for like 7 days or so, and I'm looking for not just a pierce, a close above doesn't mean anything. I want to see a close above. That would be significant to me. The chart has to prove it to me before I believe it. All right. So again, a lot of you guys I'm seeing messaging, asking, when could we see 12 to 13,000? I'm looking at 2 to 3 months out if this 30,000 line gets rejected and we see price start coming back in. All right. So 2 to 3 months out, 12 to 13,000, and then likely 6 to 8 months out before we could see that 9,000, 10,000 target if it does. Basically, if we break that 15,000 low, then I actually do think 9,000 is the likely culprit here. Okay, so that's where we are right now. And again, let's keep an eye on the Fed decision. Again, pivotal decision that Bitcoin will likely queue off of. All right, we got to go to gold, guys. I want to go to gold. I want to talk about trade setups for the day that I'm watching. I'm going to give you guys the big alpha, the trade levels that I'm going to be shorting or going long today based on the Fed decision when it comes out. So we'll get right into that. All right. Here's your chart on gold. Basically, what we see on gold is that the consolidation is continuing. So basically from 2020, from the COVID dip and then the reversal to the upside where we made this high just north of $2,000 at 2075, you have been sideways chopping. All right. All of you, if you're new, maybe not. If you've been around me for a little while, you know this pattern formation. This is a classic bull consolidation pattern. right? So if we go out and we look at the chart here, gold's been in an uptrend up until that point, and then it's been in a side trend. You want to see something crazy? Go back to the 1970s. All right, look at this same exact pattern formation. All right, here it is. The 1970s, you had 2 to 3 years up, like we had 2 to 3 years from 2017 to 2020. Then you had consolidation pullback, and then look at the run that gold experienced. To me, this is telling me the future. This chart, which is historic, is telling me the likely probability of what is going to come on gold. Now, do I think it's going to do a 9x? I don't think so, right? 9x seems a little outlandish to me on gold, which is what it did back in the 70s. But is it possible that we could get a 3x? Could we see $5,000 an ounce in 2 to 3 years on gold? Maybe 6,000? I do think so. I do think so, folks. And again, one of the things you have to note is look at the strength in gold. All right. Recently, the strength in gold is telling you institutions are buying, right? Now, one of the things, and I said this in interviews recently. I said it to my members at InTheMoneyStocks.com, at Verified Investing Crypto. When you told me, and this was one of my key points to David Lynn, even when he was at Kitco News, is that basically one of the things that I cued off of last year, even though gold did not have a stellar year, the dollar was up 20%, and gold was basically flat to negative on the year. That should not happen. All right. In a perfect world where things are equal, if the dollar's up 20%, gold should be down 20%-ish. All right. The fact that you saw gold holding steady, that was barely down on the year, that's telling you big money is buying in. Big money. And we know central banks are buying in. We know that the big money banks are buying in. So what that tells me is that gold continues to be one of my favorite assets for the remainder of this year. Do I think eventually Bitcoin will be my favorite? Yes. You guys know I'm a long-term huge bull on Bitcoin. I just don't trust the rally just yet because, again, probabilities are how I analyze everything that I do. All right, so in terms of resistance, if we go up to the 2075 level, that is now a triple top. Technical analysis tells us that when you have a double top, you're likely to pull back big. So here's your double top. Let's talk technicals here. I want to do some teaching. All right. So let's go into here. Let's see what we got here. Bear with me as I do this. All right. Here was your high pivot on gold. Here was your double top. Double tops, you get big pullbacks. All right. Now remember this because it will be useful in your future analysis. So here's your pullback off your first high. Here's your double top. Here's your pullback. What technical analysis tells us is that if we hit that level again, you'll only get a small retrace. You'll get a little bit of a retrace like this, much smaller, and then the breakout likely takes hold. So that's what I'm expecting. I think within the next month or so, we likely hit that triple top, and then we see a pullback, a very small pullback, a check back. Essentially, you're going to get sellers there. People are going to say, oh, it's at resistance again. Let me sell. Smart money's going to buy that pullback, and it's going to blast off to the races. All right, so that's your gold analysis there, guys. I want to take a look at a couple other things here. So some of the trades that are moving today. Let's talk about GameStop. GameStop, Wall Street bet favorite. This stock is ripping today 51%. It is trading currently at $26.60, $26.75. So we're talking about GameStop up here. Now, it doesn't look like it's that much of a move on this daily chart, but that's a big move, 51%. Now, to me, so number one, the company reported a surprise profit. So that is good. All right. At least they're a little bit further away from going out of business. I congratulate GameStop on that. Having said that, this is just going to be a momentum trade to me. There's too many small traders and investors in it. If you want to know where resistance is going to be today, this is your spot. Look at this connector trend line right here. If we rally up to about $34 today, $34 to $35, notice the pseudo even number at 35. That's going to be your resistance. My guess is even if we pierce it, we pull back below 35 by end of day. So essentially what I'm giving you here is a potential resistance level on GameStop of where it potentially could be a short today. Please understand, I don't condone shorting stocks like this that are super kind of, shorted already because you can get these mega moves like we saw. But if you wanted to, that to me would be your level to look on the short side. All right. Let's talk a little bit more about some other trading setups. So I got to tell you about Tesla. So Tesla's had a big move. I'm going to flip over to the daily chart. Today on an intraday basis, the level I'm watching for right here, there's a gap fill at 202.85 right here. Tesla right now is trading up on the day. It's up about $1.27, trading just below 199. 203, 202.85 or 203, that is a technical level for a potential short today intraday. It wouldn't be something that I would swing trade necessarily off that level, but as a day trade short, that's going to be looking pretty special. Let's take a look at Nvidia. Nvidia is up into major technical resistance on a swing trade basis. Again, this stock right now is trading, and bear with me, up $1.78, so it is positive on the day as we see the NASDAQ 100 essentially flat. It is into major resistance, though. So again, it could go a little bit higher, but I'm in the camp that this is now a short. In fact, I think last week when we were talking about this stock, and if you go back to my stream, my game plan last week, I said to you guys, look for Nvidia to push up into these levels. I had these exact trend lines on last week, and look at where it is. It put in a topping tail. The topping tail has not been negated yet. But again, anything in this range to me is more of a. This is a very, very pricey stock. A lot of hype around AI. I don't buy hype. You guys know me. I buy facts. I buy logic. I buy technicals. All right. Human psychology is what I game off of. These are all things that are in my repertoire. And again, hype is not one of them. Hype gets you in trouble. So anyways, watch for Nvidia. I am a bear on Nvidia in the near term for a pullback. Short-term pullback should take us back to at least 228, maybe as low as 206 if the market starts selling in a major way. All right, let's take a look at a couple other things. I only have a few more minutes before I have to get on my live trading room at inthemoneystocks.com. Ripple has had a big move. We've seen a big move on this stock here. So again, if we go to the daily chart here, and bear with me, and I've typed in the wrong symbol, XRP, there we go. There we go. So Ripple's pulling back today. Yesterday, it got a nice little breakout. You had this downward sloping channel. You could see here, it was into this. Look at this longer term trend line here. It was right into that lower level right there. That's pretty cool. That's a pretty cool chart. And Ripple did have an ignition to the upside. It did hit resistance, though. Take a look at all this sideways chop over here. That's going to tell you that there's resistance. Now, let's do a quick educational piece here. Why is this resistance? Why is this area resistance? And the answer is very simple. There were a ton of people, and this is really good education, guys. There were so many investors that were buying in this whips, right? It went up, it went down, it went up, which buyers have to be buying it up. Then it came down. Then it went up more, coaxed in more buyers. Then it came down. Then it chopped sideways, more buyers in the chop. Then it went up again, more buyers came in. So basically what you had was a ton of new money was coming into Ripple here in this sideways chop. Then all of a sudden the bottom fell out of Ripple and we went all the way back down. So all of those people that bought over here are now underwater. So what happens? All right, this is human psychology 101, and this is great, great stuff. So when price goes back into that level, how many of us have said, oh my gosh, I was getting crushed on that trade, and now I'm break even. I just want to get out. That's the psychological aspect of why you see resistance at this level, because you have a lot of people that bought in over this period that are in the short term saying, finally, I have my money back. I was down, 20, 30, 40% when it came off of this level. I'm going to exit the trade here. And that's, again, why you have the pullback here and why you had resistance. Now, does that mean that it can't consolidate and make a bull flag and break out? It certainly could. We just don't know that yet. We have to watch for what type of price action we're seeing here. All right, let's go to Coinbase real quick, guys. Again, Coinbase here, you can see had a nice move up. The only level I'm looking for on Coinbase where I would potentially short this today or in the next few days, 100 even number, this pivot area right up here. This is a nice little area. It's just too risky. If we're going to see a pop, well, and I should say, if potentially we're going to see a bounce on Bitcoin, let's say to 30,000, like let's say it pops to 30, you got to assume, and again, this is a risk. It may not happen, but I don't want to get caught with my essentially pants down in this scenario, right? So basically, if we go to this level here, which we're at already, 86 is resistance. But if Bitcoin can push to 30, you got to assume this gets another leg up. Shorts covering, maybe it gets to about 100. $100 gets me short on Coinbase. All right, let's look at natural gas, guys. Natural gas, again, if you're a member of inthemoneystocks.com, just over the last couple days, I started to inch into it a little bit at these lows. I was in it over here. We ended up making a nice little profit on this pop. For those of you guys, again, that have followed me, I talked about that. And now it's consolidated back down. Finally, we got into a level right down here where I thought the risk reward made sense. Nice reversal yesterday, small pullback today. I'm looking for natural gas to potentially still come a little bit lower. But ultimately, again, risk reward wise, this makes sense to me as a long opportunity. Just be careful playing Boyle, guys. Boyle is very volatile. Number one, natural gas already moves 5% a day pretty normally, sometimes even 10%. Boyle is a 2 times ETF of that. So if you're going to play Boyle, do it small because it is very volatile. I played it last time with my members, and honestly, it was too volatile for me. And so this time I'm playing natural gas via UNG, which is an ETF that's a 1 times. It just tracks natural gas. And so ultimately that makes me feel a little bit safer. All right. I don't like when my investment can be up or down 20% a day. Some people like that. I don't like it. I like to be a little bit more calm and collective. When I see that wild action, it's not healthy for me, at least. All right. So that's what we see here, guys. I won't have a whole lot more, but it has been a pleasure. You guys are amazing. Go into the day, watch the Tesla level, watch the Fed decision, watch the commentary. I'm going to be on a Spaces later, I think, with Banter. I will be guiding you guys through on there. I'll be trading it. We're going to do it live here. This is going to be amazing, guys. You guys have a wonderful, wonderful, thank you for coming out. Kind words are amazing. Yeah, oil, guys, again, should go to 75. I've talked about that already via my membership at inthemoneystocks.com. But again, look for oil to go to 73 to 75. You guys, thanks so much for coming out. Next Wednesday for sure, and soon daily.